This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The risk of coming across floating mines in the major Black Sea shipping route is adding to perils for merchant ships sailing in the region, and governments must ensure safe passage to keep supply chains running, maritime officials say. The Black Sea is key for shipping grain, oil and oil products. Its waters are shared by Bulgaria, Romania, Georgia and Turkey, as well as Ukraine and Russia, which have been at war since President Vladimir Putin invaded his southern neighbor on February 24. Ukraine and Russia have accused each other of laying mines in the Black Sea, and in recent days, Turkish and Romanian military diving teams have defused stray mines around their waters.
Oil prices steadied in volatile trade on Tuesday as growing worries about coronavirus demand destruction offset supply concerns as the United States and Europe plan to impose new sanction on Russia for alleged war crimes in Ukraine. Brent futures fell 36 cents, or 0.3%, to $107.17 a barrel by 10:51 a.m. Eastern Daylight Saving Time, 14:51 GMT, while U.S. West Texas Intermediate, WTI, crude fell 54 cents, or 0.5%, to $102.74. Chinese authorities extended a lockdown in Shanghai to cover all of the financial center's 26 million people, despite growing anger over quarantine rules in the city, where latest results show only 268 symptomatic daily COVID-19 cases.
Moving on to the top news in the energy sector.
Britain urged G7 and NATO nations on Tuesday to ban Russian ships from their ports, agree a timetable to phase out oil and gas imports from Russia, and further tighten sanctions on banks and key industries. Speaking in Poland ahead of a meeting of NATO and G7 countries later this week, British Foreign Secretary Liz Truss said, "On Thursday, I will be urging our NATO and G7 partners to go further in sanctions by joining us in banning Russian ships from our ports, cracking down on more Russian banks, going after industries that are filling Putin's war chest like gold, and agreeing a clear timetable to eliminate imports of Russian oil, coal and gas."
Member states of the International Energy Agency, IEA, were still discussing how much oil they would together release from storage to cool markets, three sources told Reuters, adding that an announcement was expected in coming days. The silence on how much oil from storage would be tapped by some of the world's top oil-consuming countries was adding to confusion in a market already jangled by sanctions and buyer aversion to Russian oil in the wake of the invasion of Ukraine. A grouping of 31 mostly industrialized countries but not Russia, the IEA said on Friday it had agreed to a coordinated release of oil but specified no volumes, a day after the White House said it would release 180 million barrels from its storage, the biggest in its history. Next, we have the top news in metal markets. Global nickel smelting activity climbed in March, including in major producer Russia despite the Ukraine conflict, data from satellite surveillance of nickel plants showed. Production in Russia has continued unhindered, according to a statement on Tuesday from commodities broker Marex and Savon, a satellite analytics service it launched with Earth-I in 2019. Russia supplies about 10% of the world's nickel. Savon has picked up disruptions at Ukraine's only ferro-nickel producer, Pabusky, but not at Nornickel's Nadezhda metallurgical plant in Russia, the statement said.
Gold held steady on Tuesday as safe haven demand spurred by the possibility of new sanctions on Russia countered a rise in U.S. Treasury yields and expectations of interest rate hikes by the Federal Reserve. Spot gold was largely unchanged at $1,931.61 per ounce by 10:40 a.m. Eastern Daylight Saving Time, 14:40 GMT, trading in a narrow range. U.S. gold futures rose 0.1% to $1,935.20. The European Commission proposed on Tuesday new sanctions against Russia over its invasion of Ukraine, including a ban on purchases of Russian coal and on Russian ships entering EU ports, and said it was working on banning oil imports too.
We will now look at the top news in the agricultural sector.
Ukraine's traders union UGA has asked the government to cancel wheat export curbs as stocks are very high and the shipments would not affect Ukrainian food security, the union said on Tuesday. In March, Ukraine introduced export licenses for wheat, corn and sunflower oil. 2 weeks later, the government cancelled export restrictions on corn and soy oil. Ukraine is among the world's leading producers and exporters of grain and the top exporter of sunflower oil. Ukraine, which harvested 33 million tons of wheat in 2021, had planned to export 25.3 million tons in the 2021-22 July to June season.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.